Good afternoon, everybody. Welcome to our Short Verticals webcast. I'm Connie Hill. Happy that you would join me here today when we get together at 2 p.m. Eastern Time every single Thursday. Love to have you come to our live class if you're listening to this on a recording. Now, how many of you are still struggling a little bit with a bearish approach? Sometimes when we start trading, we learn a bullish approach, and it can be a little bit difficult for our minds to kind of switch and really think bearishly. So today we're just going to kind of review again the process of what we do with some bearish short verticals. Now, I am joined in the chat by my good friend Barb Armstrong. I don't know how she got picked to be the lucky one. In any case, she's there to help field questions, maybe that I can't quite get to. So as you have them, go ahead, chat them in. I will keep an eye on the chat, and Barb will have my back for anything maybe that I can't quite get to. Now, I do hope you're following all of us on X. I'm Connie Hill CS. Barb is Barb Armstrong CS. We'll post out content that we think you might like, things that we find interesting and useful. We'll share some of those little tidbits with you as well. So it's just kind of a nice way to pick up some extra little nuggets just in your day. Well, let's go through our disclosures and we'll talk about our agenda for today. Options carry a high level of risk and are not suitable for all investors. What we talk about is intended for information and education. Don't consider it a recommendation. We will be using the Paper Money software application. It's the most robust version of Thinkorswim. Has a lot of nice tools for option traders. Investing involves risk, including the loss of principal. Something that's different about the Paper Money is that short options are not assigned in it. But in reality, short options can be assigned anytime, regardless of the in the money amount. So we want to make sure you're aware of that. Past performance of any security or strategy does not guarantee future results or success. So I'm going to go back to my question that I asked you kind of in the beginning, which is, how many of you are struggling with a bearish approach? Go ahead and answer me in the chat. Or if you've kind of getting it down and getting pretty good at it, you can let me know that as well. So we're going to do a short introduction to short verticals. There's bullish ones that we look for and bearish ones that we look for. And primarily, we're going to be focusing on the bearish ones. I do want to show you some trades we need to follow up on. We'll do that at the very end. And prior to that, we'll go ahead and do some new example trades. So let's just talk a little bit about what a bearish call vertical might be. Just checking the chat here. Yeah, Scott says, yes, it's counterintuitive for me. And yeah, that's very common, right? You're like, oh, my brain is used to going the bullish direction usually, and now we've been in some real bearish conditions. All right. Bradley's using short call verticals. I'm happy to see that. When we create a vertical, we're essentially selling a strike price and selling a strike price typically out of the money, and then buying a hedge leg that's just a little bit more out of the money. Okay? And when we do that, it creates a credit. We get paid that credit right at the beginning of the trade. It goes right smack into our account. However, you can't necessarily use the proceeds yet until the trade is really finished. How does it get finished? Well, it expires worthless and you just keep the money you received in your premium. You could go back and buy it back as a loss or as a gain and basically end the trade, right? Tying up. Those are the most common. Another one is perhaps if you're assigned on that. In this case, we're talking about calls. If you're assigned, that would be another way to end up the trade. Okay. So many times in our class, we'll talk about getting out early before we actually feel uncomfortable. Okay. So that's kind of the basics that we're just going to go through here today. Now let's come over here to Thinkorswim. Just take a quick look at what our markets are doing. I know this is a very busy chart. I'm intentionally trying to get you excited. No, I'm just kidding. Okay. But this red line is my 30-day moving average. So it's an intermediate moving average. This blue one is a 10-period moving average. And if I had my 200 moving day average, we would see SPX is still below it. But looks like maybe it's trying to put in higher highs and higher lows, right? We had this big, massive rally day. And then the SPX has just kind of waffled around. It's never come back that low again. And today's candle, well, it's growing a little bit here. The market must be putting in a little bit of a rally. So that could be what's happening here. The shadow is not very long. If it were a little bit longer, we might call it a hammer candle, which if it were at support would be a lot more meaningful because a hammer candle indicates potential reversal. So we'll kind of see where this ends up. Perhaps, right now, maybe we might consider it a Harami, which is a potential reversal candle as well. Now let's see what our VIX is doing. We know our VIX dropped a lot from where it was high in these 60s, and not very often does it get up there around that 60, okay? One thing that we might consider, let's just maybe look at the full year here, is when the VIX is really low, we have a tendency to see really bullish market conditions. And when volatility spikes up, premiums get really expensive, sometimes spreads widen out, and we see that the market is skittish, and so people might exit trades. They may become a little bit more defensive in what they're looking at. And so here recently, looks like the VIX dropped considerably, but I would still say around 30 is in a higher range. Even say 27, 28 is still in a little bit higher range where we're going to be seeing maybe some volatility in terms of what the price action does. All right. One thing that we've been stressing in this class is trying to follow a process, right? Following a process, starting out with having a watch list of stocks that we like, that we would consider trading if we had the right setup for it, okay? This watch list is right here. I called it for our class short verticals, and then the date we ran that, which was about 4 weeks ago. So we'll probably update that in the next week or two. And there may be a lot of stocks that still stay on it, but we'll see. Maybe there might be some that don't qualify or some that didn't qualify then that maybe are going to come on. Most of these are NASDAQ 100 and S&P 100 stocks, okay? So we did that again on March 20th. If you're interested in being able to create that search yourself, let's go over to let's go here. If you're a subscriber to our Trader Talks channel, which I encourage all of you to do, okay, you can come to the playlist page right here. And then our playlist that we're going to look for is 7 rows down. At least it was the last time I looked. And here it is. This playlist right here, short verticals, and you just go back in time. It'll bring the whole list up over here. I'm not going to let that really play. And so we've been really focusing on following a process. And then I believe it was this one. I believe that's the correct one for creating that watch list. Okay, so we will update it. I'm going to actually throw in a new criteria from what we did last time. But if you're like, I want to do it now, feel free to go back and do that. So again, if you're a subscriber, it makes it really easy to find our content. All right, let's jump back to Thinkorswim here. And let's pull up our first stock. I'll tell you what I did with this watch list. Took it, I changed it on today's percent change. And the ones that are down the most are on the top, and the ones that are positive are down here on the bottom. And you're going to see, interestingly enough, we have a lot more green out here on our list this afternoon than what we had this morning. But that's okay. We had determined we could use this watch list for either bullish or bearish purposes, just depending on where the trend is recently. And quite honestly, when you do something like that, it makes your trading easier, okay? Because you're like, this is my group of watch, this is my stocks that I like to watch. I'm going to look for certain entries. So on a bearish entry, we're looking for either a break of support, the stock being up resistance, or maybe just bouncing down off resistance. We could have a bounce off a moving average, which many times will act as resistance, or a close below the low of the high day. So this is what we're really focusing on to say, is it moving in the right direction that we think it's likely to continue? Okay. We're going to be looking at, we're going to do a technical analysis. We're going to be looking at those support and resistance levels. So let's take a look at our first one. Our first one on the list that we're going to go to is Avgo. This is Broadcom. And let's just kind of come back here, 6-month chart, so we can see what's been going on with it recently. So that's our 30-day, blue is a 10-day. It put in a lower low here, but interestingly enough, it also put in a higher low. With this big candle here, that big day. And so it has, at this point, a little bit of it did have a higher high, which could be the beginning of a change of trend, but then it tried to rally here and ended up with a red candle, pulling back, tried to rally a little bit here, and what I'm seeing is it's just having a hard time getting above and staying above that 179-ish area, okay? So we're going to look at that as either a bounce down off of resistance or that 30 moving average. Both of them are just sitting in that same area and have for the last few days. Okay, let's go ahead here. Let's move this guy out of the way. Yes. And there's our Avgo. Now, some stocks have a lot of trading activity, right? This stock has traded over 12 million shares today. We love to see that. Many traders like to sell between 20 to 40 days of time. And we've got a lot of possibilities here on Broadcom because it has some weeklies. So we could sell the ones with 22 days left, 29 days left, 36 days, even 43 days, some people might consider. Typically, the weeklies that are closer to expiration are the ones that typically are going to have a lot more open interest, but not when compared to the monthlies. These monthlies usually have the lion's share. But on this particular one, because it is so widely traded, I considered going into this one, the May 9s, 22 days. So we're kind of at the short end of that window that some people like to sell. But as we come out here, this is my open interest column here. We can see lots of open interest out here. It's like, yeah, we could trade contracts out there. We've got several hundred actively going. All right, next one is, well, what leg do we sell? What strike price should we choose? Many traders like to use between say a high 20-something delta or a 30-something delta, or sometimes they'll go into the 40s. Sometimes you might have a lot of choices, and sometimes you might not have as many choices as you might like. Now, let's see if this, what I was eyeing here before, still makes sense. I was looking for us to sell the 185. Let's try that, see how that is. The 185, and then would be buying the option, the leg a little bit further out. It'll say sell vertical. There we go. And I'm going to actually raise that by a penny and lock it in so that the numbers aren't wiggling around on us. So on here, there's plenty of open interest in, let me come down here a little bit more, in either of those contracts, okay? If you're somebody that's trading 200 contracts at a time, then probably not enough. But if we're trading 10 contracts, 20 contracts, even 30, we've got a lot of contracts to deal with. All right, what about the return? Okay, the return here, let's go figure that out because that'll be the next thing. Is it worth doing the trade? So 125 would be the credit that comes into our account. That's our theoretical max gain. $5, the difference in the strikes minus the credit, gives us 375, which is our theoretical max loss. So let's run that math there. All right, we're going to go 125. Am I typing in right? And we're going to divide that by 350. That gives us about a 35% return. So many people will feel comfortable with that. If you wanted a higher return, maybe you come out here and sell the 180. If you wanted a higher probability trade, maybe you come out here and sell the one with the 22 delta. The one we're going to do is this one here, and we're starting out with a 74% chance that it's going to expire out of the money. Never guaranteed, but it kind of gives you your odds, theoretically, right, with statistics. So we're content with that. We're happy to do that in our trading account, for an example trade here. We are willing to risk $1,500, lapse this, on any trade in this account. Okay, so we're going to risk $1,500 here, and we'll put this in. We'll go through this part kind of methodically the first time, and then the next ones we're just going to rinse and repeat over and over again. Okay, we're going to divide that by the theoretical max loss. If everything in the world goes wrong and we get a max loss, I probably had too many numbers in that. Let's try it again. 1,500 divided by 375. All right, that says we could do exactly 4 contracts. All right, so we are going to do that. Now, something that I think is helpful is to say, where is an exit point? Where could we possibly get out here? And so what we're going to do is put in an exit order so that if our stock gets us to that price, then we'll just say, execute that order for me. Many times people don't put a stop loss in this kind of a trade. They might use more of a mental stop. The reason for that is because we're already putting on a hedge leg here. That's what this 190 strike price represents. So they might say, you know, I've got a high probability trade. I've got a lot of room to wander around. In this case, 185. Let's just kind of see where that would be if I were going to go draw that line in here right now. 185 would be about in that neighborhood. Okay, just a little bit lower. So stocks here, it could go up a little bit. We could still be profitable. It could just go sideways here. Maybe use that 179-ish area as resistance and just kind of dawdle along here and let time decay work in our favor. Or maybe it could drop with the expectation that, yeah, it's having a hard time getting above that resistance. Okay, so basically 3 out of 4 ways the stock could go could be possibly profitable. Okay, what if it goes above 185? If it goes above 185, it doesn't necessarily mean we'll automatically be assigned. Okay, that's why it's helpful to be out there with a lot of contracts. If you're just a small number of contracts and out in the big pool of contracts, then you have just statistically a lower likelihood that you might be the person assigned. But say you're in a pool of 40 contracts and you have 10 and your strike price goes in the money, then just statistically, you might be the one that gets assigned early. Okay, so kind of look for those facts. Make sure you got a lot of open interest, and it could come up here and then come right back down, and we're still letting the trade work. Okay, let's go ahead. Let's put this in. We're going to use our calculator. If we get a chunk of this, all right, meaning a good size portion of the $1.25, we get about 25 and a percent I'll use sometimes. I'll use 70, 75, 80, kind of rotate around. There's not one magic percent, although you might get to one you're comfortable with that you like to just methodically use. So today, let's go ahead and use that 70%. And if we've captured 70%, only 30% is left. And so that would say, okay, go buy back that option that spread at 375. And we're going to do a first trigger sequential. So we'll create an opposite order here. We're going to put in we'll go with 37 cents. Going to make this a good till canceled. And we're going to leave both of these as limit orders. Let's go ahead. We're going to submit this. And since this is a bearish one, I'm going to put it in our bear short vert bucket. Now I'm going to look out here. Just make sure that there aren't any questions I need to answer. Looks like Barb's helping out here. And he says, do you have a video that discusses the creation of your watch list? I do. And you may have got here a little bit earlier. I showed you where that was. I am going to, no, that actually, I don't think that is it. I was going to say I have a link in my notes, but I don't think it's that actual video. Okay, so just go over to, make sure you've subscribed to our Trader Talks channel. Okay, then it allows you to find things more easily. And then you would just come down 7 rows and go across. And this is the playlist for our class. And you're going to look for the one that's dated March 26th, I believe. Or March 20th. I think it's March 20th. We'll see when we get back to Thinkorswim. Okay, so that's where you can find it. All right, next up, let's get our charts back here. And next one up, it's from our watch list again. It is, I'll kind of balloon this out. The next one up is going to be, let's see if this still looks good. I was looking at Micron earlier here today, and it's kind of recovered a little bit off its lows. Technology, a lot of the semiconductors are getting beaten up pretty good. I know Taiwan Semiconductor had a better earnings report and favorable outlook for their company, but not all chips are being treated equally. Okay, so what am I seeing on here for a technical setup? Well, we see the stock try to rally. It just can't get above that 10-day. In fact, that 10-day seems to be acting as a resistance, and what we're seeing here is actually a kind of a bounce off that 10-day, as well as kind of some horizontal resistance here at 72 that's making it a little difficult. I wanted to show you where that came in. Sometimes people wonder, well, old support resistance, do they really matter? Do I need to pay attention to that? And the answer is it just establishes where people have sold off on the stock before and where they've bought in. And so we can see, yeah, this is two years ago, right? But at that point, Micron just had a hard time getting above 72. And so could it act as resistance again? Yeah, it absolutely can act as resistance again. So let's go see what choices we might have available. Now on this one, we're going to use the 9 Mays as well, because there's plenty of open interest here. Not as much as Broadcom had, but still substantial, for any contracts we might do in our class for an example trade. Let's see if this one still looks decent to do. I was looking at doing something with the 30-something delta. It looks like we might have a couple of choices here. 73, 74, actually 73, 74, 75. Those are all 30 deltas. Somebody might consider a low 40 delta. Okay, so we have lots of choices here. What I was eyeing earlier, and we'll see if this still makes sense, is 73.75. So it actually is a little bit higher of a delta. I think the stock has recovered a little bit. Let's shift. Let's go to 74.76. We're going to spread it out by 2. Those of you that have a smaller account, one thing that's nice about dollar increments is if you or somebody can trade, say, one contract or a small number of contracts to keep your risk in check, single strike prices kind of give you a little bit of flexibility that way. All right, we're going to go 74.76. You don't have to. You could just stay with the single increment. And let's go over here. Let's lock this in at 56 cents. And let's go see, does it give us enough of a return? Okay, the first trade we were happy with, and we said, all right, we will do it. So if we have 0.56 minus $2, and $2, not 50 cents there, sorry, $2, then our max theoretical loss is 144. Okay, so we'd be risking 56 cents to try to make that. Our risk on it, I said that backwards. Our risk would be 144, all right, in order to try to make 56 cents. It's about 71% probability right now. And people that typically put a number on there will look at, 60 or higher. All right. So we've looked at this technical setup. We've picked some strike prices, and let's figure out the return. Okay, so the return, we've got 56 divided by 1.44. That's about a 38% return. Now, you might feel comfortable with that. You don't have to feel comfortable with it, but for our class trade, we're going to do it. And earlier, I figured we could do 10 contracts. Let's see if that would still make sense. 1,500 divided by what was that? 146? No, 144. And we can do, that says 10 contracts, which is nice. And if you were uncomfortable doing that many contracts, some people might just do a half a position. They might not risk the whole 1,500 because you don't have to. Especially if you're in circumstances that, you know, you're not feeling the best about, but you're feeling like, okay, I'm going to do it, but I'm just not going to dive into the deep end and load my boat. Okay. All right. So we will do 10 contracts here. We'll do a first trigger sequential. We'll go ahead. We'll create an opposite order. And again, if we get the chunk, the big chunk of this 56 cents, we're going to get out. You know, I have to tell you, I'm a person that squeezes every little last bit of toothpaste out. I do. That's just my nature. I scrape the food out of the can or whatever, all right? But it's maybe not the best way to trade short verticals. Some people will say, you know, if I can get a good size amount, then yeah, let's get out, take our profits and move on to another trade. Because what happens is you end up maybe risking an extra nickel, an extra dime, something in that range, right? When you've already banked or been able to lock in profitability, if you would execute the trade on a chunk of it. So then sometimes people get to the point they're like, I don't know that it's worth it. So 56 cents times, this time let's do 75%, okay? Which would mean when 25% is left, we're going to buy it back. We're going to put our order in here for 14 cents. Oops, just one period there. We're going to make this good till canceled. And we're going to send it to our bearish bucket. So our bearish short verticals here. Chuck, let's talk about your question here, Chuck. You said you're not struggling, but you're having problems with funding. How are you able to get prices that you come up with? I'm going to interpret that, Chuck, as maybe you're putting in a particular value in your order, but you're not getting filled on it. Is that where that question is coming from? Am I interpreting that correctly? Typically, well, you can see this one hasn't filled yet. But typically, I'll come over here. We put ours in to get filled at 56. Right now, the market's saying, we're only going to give you 55, and that's fine. If we don't get filled by the time our class is over, I'll go back and adjust our orders so that we do get filled. I could do it right now, right? I could just do a right mouse click, 50, you know, 1 penny's not going to make or break the trade here. You know, we could come down here to 55 and see if we get filled at 55. Okay, so we did. And it's just a matter of seeing what the market's got out here. The mark price is typically what they're showing there, which basically means the bid point between the bid and the ask price. It's kind of like what we shoot for. We don't always get, but it's nice to shoot for it. And many times, real market and paper money will do that for you. So I hope that makes sense. Isaiah is wondering if we were going to be doing an earnings trade today. Today we are not, but we are getting into earnings season, and there will be plenty of earnings trades. I'll kind of mix it up. Not everybody loves to play earnings, especially if you're new to the strategy. It can spook some people, although, you know, trade everything in your paper account, right? Don't be afraid to start trading in your paper account so you can learn, so you can experience. All right. That's really will escalate your learning curve. Okay. If you haven't had a chance to go through the course yet, the option strategies course, that's a great resource as well, but it's the practicing where you get really comfortable. In fact, last week, and the week before, I challenged you to do some paper money trading. I said, I can't remember the exact number I gave you. I think I said between 3 and 5 paper trades. We're going to go to another trade here, but I'm curious to see how many of you followed my encouragement to have you do that. You can go ahead and let me know. Let's see. Okay, somebody got filled at 56. Okay, Chuck said I probably explained it wrong. Example that the last order you did. How did I come up with the percentage? Oh, how did I come up with the percentage? Let's review that on the next trade. We'll go through the exact steps, okay? Because what we're looking to see is what is our max theoretical gain by our max theoretical loss. Okay, so we'll spend a little time on that. Here's one we're going to check out. Actually, let's see if how this one looks. I mostly had bearish trades, but I did dig up one bullish trade. Let's see how the chart looks right now. Whoa, the chart is looking bullish to me. All right. So Johnson & Johnson already had their earnings. So that's out of the way. And what happened? Today, I mean, right here, it was just kind of the last 3 days, just kind of hanging at that support resistance area. And then today, a nice move off of it, a nice little bounce, okay? So it's up, when I looked at it initially, it wasn't up quite this high. Right now, it's up 3.3%-ish, okay? But we're gonna go ahead, let's say, we're gonna go ahead with it. What would our entry be here? Basically, this bounce off support. In my watch list, or on my scratch pad, for something bullish, we're looking for maybe a support bounce, which could be horizontal or off a moving average. We could be looking for a close above the high of the low day. And I wouldn't really see that. I would want these candles to really be pulling back more to give us a low day there. But we can take a moving average bounce. Those are the types of things we're looking for, or possibly a breakout. Okay, this one, because it has kind of been above it, is why I would consider it more of a bounce. If your line is a little bit different and it is, as you look at it, maybe you think it's a breakout, that's okay too. Okay, just based on where my line is. So as we come over here, 6.6 million trades traded today. And so Johnson & Johnson, let's see, we're going to go to the put side here and do a short put vertical. Okay, we're going to be bullish with it. But the main nines, can you see here how it's okay, but it's not great. Okay, so we're just going to collapse the nines and we're going to open up the 16s. And look at that open interest. There's oodles and a lot of activity out here today. That can help us feel better about things. Now, they are in 5-cent increments here, or $5 increments. And really, probably the most likely one here is this 155 to sell at a 0.3 delta. This one, maybe it was a little higher than some people would be comfortable with. This one at a 16 delta is probably not going to give somebody a great return. So let's see how the numbers work out here. All right, $5 widespread, and I think we can get filled slightly higher. Okay, so we're just going to nudge that up a little bit there. And we would be risking what? $5 minus the 95. And I'll put some numbers down here, and that might help answer your question about these numbers, okay? So on this one, our max gain is 95 cents, and our max loss could be what? 1.04. $5 or $5. $1.05 is what we, not $1.05, 3.05. There we go. Actually, it's going to be 4.05. $5 minus the 95 would give us 4.05. So let's see, percentage-wise, is it a good enough return that you feel comfortable with it? Okay. Even though I might feel comfortable with it, doesn't mean you have to feel comfortable with it, okay? So let's put in our credit, 95 divided by 4.05. That's given us a 23% return. Now, some might not like that so well. Some might say, really, for the number of days that we're in the trade, which is 29, I like to get 29%, like a percent per day. This is coming in here at 67% probability of success. And anything above 60 is considered high probability. So it might be a matter here of how, where your threshold is for returns. I think it has changed a little bit since I initially put it up, because when I was pulling it up, we were going to get a 30% return, which a 30% return is just right in the right area. But for learning purposes, we're going to go ahead and do it, okay? It's not one that meets everybody's criteria, possibly, but we're going to move ahead with it. Now, knowing that we would be risking about $400 a contract series, let's take our 1,500, divide that by 400. And that says we could do 3.75 contracts. We really can't do 0.75 contracts, so we are just going to stick with the 3. Let's see. Dirty Cactus is saying, maybe I did something off on the computer. Let's do it again. 0.95 divided by 4.05. Yeah, I'm getting 23% there. So yeah, I really think it is that. Okay, I'll plug that in down here. Something that somebody might do if they said, hey, I really like to get a particular percentage. Maybe they come in here, and even though this is what it's giving us right now, maybe you change yours, and you say, I want to get $1.10 out of it. They don't fill me. Oh wow, they don't fill me. But if things adjust a little bit tomorrow, maybe the stock gaps down a little bit, then possibly you could get filled on it. So that's another approach that some people might do. Because I want us to learn from this, I'll put it back to 95. I'm going to go ahead and do the trade, even though return is a little bit on the low side. We can do 3 contracts. And did you catch that this time, Dirty Cactus, on the max gain, max loss for us to come up with that percent? I think that's really what your question was about. Okay. So let's go ahead. Let's do a first trigger sequential. Put in an opposite order. And this time, let's say we want 80%. Okay. Let's say we want 80% of the 95 cents. That means we'd only have 20 cents left. So we'll multiply that by 0.2, or 20% would be left. That says buy it back at 19 cents. So we're going to do that. And one thing that's nice when you put in these orders is that, suppose you had a target here of, say, 19 cents. And you're like, ooh, if it gets there, I want to get out. But you didn't put an order in. Then you have to try to catch it. And it might go there, like sometimes you've seen the markets gap up or gap down, and you get filled right quickly because you had your order in, and maybe if you come back an hour later, it's out of that spot, right? It's kind of like you missed it. And so by putting in your order, you avoid that situation. It just can allow you to lock in some profits that you're comfortable with, okay? So let's go ahead. We're going to send this to our bullish short verticals bucket. All right, let's take a look at some trades. Most of our trades we do not need to do anything with right now, okay? Because they're just working. So first one here, let's look at MDT. And on the charts, I try to document what the trade is, all right? So MDT, we got in here last week, and the stock's just kind of waffled around. All right, our short leg here is up at 87.50, and so we've got a ton of leeway, right? It can sit here and dawdle along. It can go up a bit. It can even go above it and come on back, or maybe it'll just keep kind of having weakness, and that credit just melts, right? The value of it decays, and we're like, yes, we love to see decay. Okay, so really in pretty good shape. So we don't need to do anything with that one. Let's take a look at the next one. The next one is, so we did Cisco last week as well. We did a short call vertical. It was a 62.50. So our short leg is the 60, which is this one right here. And again, got in here on this day, and this 58-ish area really, since we got in, has really acted as a resistance for it. The stock's kind of dropping down here a little bit. It looks like maybe it might be up ever so slightly today by about 50 cents. So are we worried about it? No. Are we just going to let it work? Yeah, we're just going to let it work for us. Awesome. All right. Next up is Coca-Cola. This one I don't think I did in the class. I think I did it after our class when I went back and looked at my timestamp on it. It was one I had wanted to do in our class, but didn't. Okay. As we come over here, let's kind of pull these up here. Here's our Coke. We did 9 contracts. Come over here, we can see it was a short put vertical, so a bullish one. And our leg that's short is this, looks like 69 right here. Okay, and we're up to 11.50 or to 11, and 165 of that was today. So sometimes there's a trades of patience, and you can be patient. I can be patient, right? Just allow them to just tick tock, let time tick away. And as long as we don't have a major reversal or a major technical break, then we just kind of leave the trade alone. If we get to a point, we've done this in the past, we haven't had this opportunity recently, but if we get to a point where we are not, where it makes a technical move, say in this case, something that might be a technical move that we might change the trade up, is, instead of continuing up, what if it came down here, and this is kind of a long way away, here at 68, what if it broke through the support area here? Then we might be going, oh no, we're breaking through some decent, strong support. And so we might choose differently. Okay, we might say, let's go buy back the short leg. Let's hold on to our long puts and see if this puppy drops. Okay, we haven't had to do that lately. And again, so we're just going to let it work. So I'm just going to make sure we're caught up on our questions. How to train those, how to scan for those tradable stocks for the watch list that we created a month ago. I have just a moment. I'll go back and show you. Okay. If you haven't clicked on that blue subscribe YouTube link, click on that, because that takes you and you can basically see all of our videos from whatever angle you're looking for. Okay. Come down 7 rows to our class here on short verticals, and then you can come in here and you can see the previous classes. And oops, I didn't really want to play it. I think it is this one, how to create a short vertical watch list. Hey, that is the one, okay? A repeatable process. And I may have pointed to this one earlier, but it's this one that's pink, okay? And you can go back, it's something that we did at the very beginning of the class. And I told you we are going to be using it for the next few trading days, or trading weeks in our case. We're just going to continue to use that watch list. And again, we may update it next week. And if we do, I'll walk you through the steps of doing that. Okay? Very good. I think we are caught up on our questions for things. You guys, we've had a good class. I hope you guys are feeling comfortable with the bearish hat on. I know it takes a little bit of time to convert your brain over, right? It really does. And so that's why I'm really encourage you to paper trade it in your paper money account. Man, you get the hang of it so much easier than not. Okay, you can practice with our example practice trades that we're doing today. Probably have some of your own. Okay, and so just kind of as you just go through the process, look at your watch list. Do you have a technical entry? Let's see if we have strike prices that we can sell that kind of fall in those general parameters that traders like to use, as well as, okay, then am I getting an acceptable return? And if you're not, right, just move on to the next one. You don't see something that has an entry on your watch list, you just move on to the next one so that you can find one that may work, that might be suitable. All right, Barb, thanks so much for helping out in the class. I appreciate it. Now, I did not see a survey today. Barb put in some other links here for your use. But if you found this helpful and useful, go ahead and hit the like button on the way out. That lets others find it in our algorithm for YouTube so that they too can find content that you found helpful and useful for you today. Okay, we're going to check back on all those trades next week. All right, so we will see you then. Practice in your account. Bye-bye.